together a little PowerPoint here. I feel that this is really important. This is going to go on the public area of the website, and I hope that people take this very seriously. This goes way beyond what method it is that you trade or indicators that you trade or the style that you trade. This is the true reasons why 95% of all traders fail. And this is based on my personal experience. I almost became part of this group, and as bullheaded as I was, I finally, after 5 years of losing money and not giving up and trying losing money, I finally listened to what a few really good traders were trying to drill into my head that I didn't think I had to listen to. So I'm going to go through all this, and I really hope that everybody in here takes this to heart and really understands what's involved in succeeding as a trader. One of the biggest reasons, unrealistic expectations. Okay. Traders believe the Holy Grail exists outside of themselves. Essentially, what that means is traders go from service to service and from method to method, thinking that they're going to find something that's going to tell them where to get in, where to get out, and they're going to make money at it. And realistically, that's what we call the Holy Grail, where your computer becomes a Mac machine. If that existed, we all wouldn't be here. There are systems, black box systems out there that do produce money, consistent money every day, and they're created and reserved for big institutions that we as retail traders couldn't even think about affording to use. So just please keep that in mind. The Holy Grail exists within you, okay? Many system methods promote unrealistic claims of profit and success. All of you get bombarded with emails. Look what you missed, look what you missed, look what you missed. All these big profits for the day and how they turned list, but they fail to mention the losers. Losing is part of trading, okay? And companies mislead traders by selling them to turning small accounts into large accounts over a short period of time without drawdown periods. I don't care what kind of trader you are in the beginning. When you get beyond a certain checklist that I'm going to go through and you get to actual real money trading, to experience the emotions of real money trading, you will have drawdowns. You will have losing days. And you need to maintain a risk profile that's going to get you through that. And essentially what happens here is this leads to traders risking too much of their account size in any single trade, and they take too much of a loss in any single day. You need to look at risk capital, and essentially you should not, at the high end, risk more than 3 to 4% of your trading account, your trading account in any single trade, and it's about the same in any single day. Okay, you can go up to 5. If you have a larger account and as you build your account, you want to drop that to about 1% because you'll be trading more size. Lack of time spent learning how to trade. This is a big one. All right, and this some of you may not like to hear. Some of you may not like to believe or understand this, but this is an important one, and it's just true, and this is based on my experience. Too many traders feel that sitting in front of a screen taking trades is spending time learning how to trade. I got some news for you. If you're sitting in front of a screen trading a method or a system, there's a whole lot of steps before that should happen before you even think about doing that. I try to work with a lot of people in doing this, and I assume, and it's my fault, my mistake, and I apologize for those that I haven't told this to, but I assume that they have gone through the steps that I'm going to talk about going through here before they spend any time in front of the screen. And we have a couple people in here now, so a couple more people that I really wanted to see this. And I'm going to be using some examples here, okay? This is the key, backtesting. I should bold and highlight that word. Refining, backtesting, and more refining is what I consider is time spent learning how to trade. Once you have a trade plan in place, You back test it, you see how you like it, you see if it works, you make changes, you keep back testing it until you get the confidence that you know that what you're looking at and what you're trading has worked in the past. Of course, there's no guarantee it's going to work in the future, so back testing is a real important part. Spend your time back testing. Okay, it is really the only way that you're going to gain confidence in what you're trading. Okay, this is another one. This business offers you opportunity for an income equivalent or greater than of a lawyer, CEO, brain surgeon, etc. And do you realistically think that you can make the income of these professions without putting required work and study? So many people come in and want to make money, and don't realize that this is a business. This is a job, and it requires a lot of work, a lot of study. And I don't mean sitting in front of a screen taking trades. I mean a lot of back testing, okay? So please keep that in mind. I'm going to take it even one step further. And I'm going to say this. The only difference of trading one crack versus 100 is your account size and the control over your real money emotions. If you only want to make $100 a day or $1,000 a week or whatever, there's no less work that you have to put in if you want to make $10,000 a day. Okay, please understand that. It's still becoming a successful trader. I'm not one of those people that believes you have to dive in with your heart and soul and make trading your life. Okay, I truly believe that you can trade for a few hours a day, make it a part-time job, and make a difference in your life. But what it takes to get there is the same that it takes to get to the point where you're trading huge dollars and making huge money. Okay, and I don't care what method it is that you trade. All this has nothing to do with trend following trades. This is basic stuff that I learned over a 5-year period of time, and I was too bullheaded and people told me this, okay? And I was just like, oh, I can get around that. I put things to memory, I can deal without doing this, okay? And basically what I'm trying to say is trading for $100 a day is essentially trading for $10,000 a day from a learning standpoint. Okay, I think I just kind of said that, and I don't want to beat that with a dead horse. All right, the next one is, here's the biggest one, trading without a trade plan. Okay, so many traders will look at a method, they'll go through video material, they'll even download a trade plan, one that I've posted or one that they may have written, and they won't trade it. Okay, they won't have one. They'll have a mental plan. All right, when I say a trade plan, I mean something written. Okay, it's virtually impossible to be consistently profitable in trading without a complete and comprehensive guide that has been, again, back-tested to give a trader confidence moving forward. How can you know moving forward that what you're trading has worked in the past unless you've back-tested it? All of what we have to offer, although it's visually simplistic, and I feel it's one of the most simplistic ways of trading yet, with the Momo indicator added to it, gives you some real good read on market movement, divergence, reverse divergence, and you drawing lines into support and resistance can really add to all of this. But you have to backtest it. You have to have a plan, and you have to backtest it. And this trade plan should be put into memory or reviewed before every trading day. Okay? When I say put into memory, you should be able to recite your trade plan word for word, like it was something you memorized. And if you can't do that, or you don't want to put the time into it to do that, okay, at least pull it out every morning before you trade and go through it. It really doesn't need to be more than 3 or 4 or 5 pages long, the base trade plan, but it's something you should go through and something that you should look at every day before you start trading. Okay? It is the only thing that you have to go back to if you lose focus. This trade plan should have screenshots of daily trades, taken or not taken, if you missed them or if you got them, winners or losers, that comply with this plan added to it for different looks. You're going to describe a setup in your trade plan. You're going to give it a name. You're going to take a screenshot, and you're going to say, this is my entry. This is why I took it. You're going to completely describe it. This is why I have permission. This is why I don't. You're going to create a filter set, and that is going to be your core for, let's call it, setup number 1, which I've always talked about, going from buy to sell, pull back in, and then continuation. Okay, that trade will have different looks. It's not going to look the same every time. The Wick Renko bars really help smooth out a lot of noise in the market, and especially the longer time frame ones, they tend to really clean things up a lot. So the looks don't change a lot, but they do change. So this is something you should add. If you see a trade that sets up according to your plan and you notice that it looks different or reacts different, take a snapshot of it, mark it up, make comments of it, add it to your book. I have 3 4-inch thick binders of daily trade shots of every trading day that I've traded my plan. So, and I add to that, and these binders are full. And every once in a while, I go back through them from the beginning, through it, to see how I've developed as a trader and to see what has changed and any adjustments that I want to make. Okay? As I said before, when a trader loses focus, throws his hands up in the air, says, man, I just can't get this, I don't know what's going on, the trade plan, his or her trade plan, is the only document or guide that they can use during times of uncertainty. Go back to it. Find your way again. I do lose focus. And when I lose focus, I stop, I go back to my trade plan, I review it, and then I get back into trading. Only if I feel that I can follow it. All right? And if I can't say this enough again, traders do not stick to their plan. Okay? These are all the steps to becoming a successful trader, by the way, going through these one by one. They don't stick to their plan. Traders take trades that aren't even in their plan for a lot of different reasons. Some are emotional, some are sentimental, for all kinds of reasons. They take trades that are in their plan. They take profit too soon, move to break even too soon or too late. They don't take profit based on support and resistance or market conditions. And all goes what is written to a trader's plan. And when I say all goes, meaning some people will say, when I hit a double bottom, I'm taking profit. Some people will say, when I hit a double bottom, I'm moving to break even. And I'm still going to go for full target. Okay, whatever is in your plan and that you have back tested is what you need to follow. Different traders have different ways and sets of trading according to their personalities. This is an inside-out method. There will be plans written for outside-in trading, divergence trading, to actually take trades, and reverse divergence trading to go back with the trend more in line with the method outside the tools. But irregardless, all this still applies. Okay, you have to write a trade plan, and you have to stick to it. It's all that you have. After 1 or 2 bad days, they abandon the rules, throw everything out the window, and then guess what? They change their trading plans too soon, okay? Or they just get up, quit, and leave and say, I need to find something else, find something better. And again, I'm going to go back to this. Any trade plan should be back-tested by the trader manually, and if the results are acceptable, then and only then should they consider trading it during live market conditions. And I do apologize for those people that I don't have this up on the website and haven't spoken to. When traders come in with a certain understanding and a certain amount of experience, I forget that I was so stubborn in the past that all these steps that I'm talking about, I did not realize consistent profitability until I fully accepted these steps. And I don't care where you go, I don't care what anybody tells you, you will find all of what I'm saying here to be true. And I have yet to find a trader to tell me that it's not. Off the floor. Floor trading is a little bit different. If the trade plan backtests well, why would you change it to something that has no known history of success or failure, that's tested by yourself? Why would you change it? Why would you take trades that aren't in your plan? Why would you take trades that, show up? If they're in your plan, okay, take them. If it's in your plan, if it's not in your plan, you can't trade it, okay? If the trade setup is in your plan and it meets all your trade criteria, you have to take it. And this is the bottom line. This is all coming later now. We've developed a trade plan. We've back tested it. We've created rules. We know it has a history of doing well, and we're going to create a plan around it, and we're going to stick to our trades. And we're going to start in sim. Forget the real money emotion. We're going to go to sim. Don't trade real money unless you're profitable in sim. It's an exercise of futility. You're just going to confuse your learning curve and your success, your path to success. Okay, Once you start profitably sim trading on a consistent basis, then I recommend slowly graduating over to real money trading. Take one trade a day, real money, then go back to sim, then take 2 trades a day, real money, and eventually you'll be trading everything real money and you won't be trading sim at all. Okay? And again, it's most important. If trade setup isn't your plan, you have to take it. Okay? A lot of traders, this is the next step. Now, once you've gotten through all the above steps that I went through, they cannot recognize and overcome the emotions of real money trading. So they have a trade plan, they've back tested it, they've forward tested it with sim trading, they do well, they switch over to real money, and everything blows up. Okay? This is the last step of a trader's journey to success. It's one of the most difficult steps too. Believe it or not, the earlier steps are really easy. It's just most people, most traders aren't willing to do it. They just don't feel they have to or think they're better than that. They think they can beat the market. Okay? And trust me, the market will punish you every time if you don't understand that you're just a small, tiny dot in the universe compared to the trillions of dollars that flow through the markets every day. Another emotion is the fear of losing. Okay? It's the number one emotion that must be overcome. Losing is a part of winning in long-term trading success. If you're one of those people that can't stand a loser, you're in the wrong business. The object is to win more than you lose, and with a method that generally is 2-to-1 reward to risk, you only need to be right half the time still to make money. So we make this easier to overcome by the nature of the targets and stops that we use. Okay? And losing is part of winning. You need to understand that. This is a big one that a lot of traders don't understand, and I didn't for the longest time. Emotions of elation with winners and anger and disappointment with losers. Trading is a business, and whether you have a winning trade or a losing trade, you must consider a business transaction that is complete and move on. If you don't consider it a business transaction and you get hung up in it, you're not going to be able to move on. And I mean on the win side too. There's a lot of traders that get a great winning trade and they're like, wow, and just wow and wow and wow, and they lose their focus and they start making mistakes. When the trade's done, win or lose, get over it. It's a business transaction, signed, sealed, and delivered, done. Okay, we need to move on. Trades taken that are not in your plan and succeed can be the worst thing that can happen to any trader. I did this many times too. I took a trade. I said, oh, I think this should work. You know, I see this, I see that. And it wasn't in my plan, and it worked. I said, wow, see, I can do that all the time. Well, guess what? It worked once, it worked twice, but in the long run, it didn't work. And it's the worst thing when you take a bad trade that wins. Okay? The best thing that can happen is if you take a bad trade and you get punished for it, you can say to yourself, I knew I shouldn't have taken that trade. And it'll just reiterate that it wasn't part of your plan. Now, if it was a planned trade and a loser, whole different story. But if it's outside your plan, the worst thing that can happen is it to be a winning trade. Overconfidence is an emotion traders will experience. This includes, but is not limited to, overtrading. I tried to go over this at the last meeting we had, and I do apologize for all the technical difficulties I had, and I lost all that. I had so much written up to talk about overtrading, but I need to go back here because so many people are floundering out there and really don't understand trading as a business. But overtrading usually leads to giving back most, if not all, of your winnings for the day. Breaking of risk parameters. You know, you got 2 losers in a row. You see a nice trade set up, and you say, well, I'm going to double down, or I'm going to take 2 contracts instead of 1 so I can make my money back. Kind of revenge trading. Don't break your risk parameters. It's the only thing that's going to keep you afloat. Protect your capital. Once you get to real money trading, this is all after the above things that I've described have been gone through. These are the last phases of trading success. You know, this is where one-on-one coaching comes in. And, you know, this is where people pay big dollars to have people show them how to overcome this. Once they've gotten to a point where they're profitable in sim, are able to stick to the rules, and now have to fight the emotions of real money trading. They are real, and they are strong. This is continued here. Missing a large move and feeling that they should have been in it. This is a big one too. A lot of people will see a move and it'll just go up, 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 or down, 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 down. And at the bottom, they'll get in short. At the top, they'll get in long. And they'll say, oh, man, I should have been able to get into that move somewhere. And if trades don't set up according to your plan, let it go. These markets move all day long, every day. Some more than others, some markets more than others, but they do move. You don't need to catch every move. If it doesn't fit your plan, or if you miss an entry and you don't have a re-entry in your plan, let it go. Okay? And don't trade without room. And again, this is defined in your plan. Room should be left side trade room, meaning there should be room for that trade to go. If you break out of support or resistance and you have no room and you're beyond it, well, that's considered room too. But this is all defined in your plan, and I can help you with this. But this is a one-on-one thing. I need to see what you're doing and to see what level you're at in trading before we even step forward. Too many people take 1 or 2 steps and then jump to the 10th step, start real money trading, and then just lose control of everything. Okay? Please understand this. Missed money is better than lost money, and trading opportunities will come according to your trade plan. Okay? Trust me on this. Missed money is better than lost money. There's a big emotion that a lot of real money traders have to overcome. Again, these are the last phases, the last steps in the trader's journey to successful, profitable trading. Revenge trading, the feeling of having to make lost money back. You have a few losers, you're in the red. Again, this is going to usually not taking trades according to your plan. You hit your stop loss for the day. Oh, I think I'm just going to take one more trade. I think I can make it back. Okay, and the feeling you can actually beat the market. Trust me, if you have this thought inside your head, quit, leave. Don't trade. The market will take your money away, and really fast too. We go along for the ride in generally the 1/3 area of a swing that is the sweet spot, the pullback and continuation area that offers the highest probability of trade success. So don't think you can beat the market. We're just following big money. Big money follows trends. So as long as it meets all the criteria of your plan, you don't need to try to beat the market. You just need to go with it. Traders fail to take ownership of their mistakes. They'll blame everything and everybody else for their results or lack of. This method stinks. My mouse got hung up. My internet connection's slow. My computer locked up. I mean, I can tell you, and I've been a victim of this too. I can tell you, and all the excuses that I gave, and I can tell you all the other crazy ones that I've heard. But the bottom line is you miss a trade, you take a trade, it's a loser. You take a trade, it's a winner. It's your trade. You took it. So you need to take ownership of it, okay? And not just your mistakes. Take ownership of your winners too. Your mistakes you learn from. Your winners are just another business transaction that went the way that you wanted it to go. Never, never, never be afraid to ask me for help in both identifying and overcoming these and many other real trading emotions. I can't tell you how many people come in and out of this service who they never ask me a single question. And then I get hopeful when people come in and start asking me questions and we start a dialogue and then I see them veer off a path that isn't following what I'm talking about here, and then I don't hear from them anymore. They just go off and do their own thing. I try to stop them in their tracks. I say, deliver me a plan. Show me what you're doing. The screenshot you send me is obviously outside of the rules of a trade plan that I created. So if you've got some other trade plan, let me see it. And I won't get anything. I'll just get frustration emails saying this isn't working for me, or I feel like I must be dumb, or I missed this, or I missed that, and it's a self-fulfilling prophecy of failure. Okay, so never be afraid. I spend a lot of time. This service costs $100 a month, and when I tell you how much time I spend, if I just traded during that time, the amount of money that I would make is far, far beyond what anything is going here. I have a vision in mind for this company, and it's going to encompass basic discretionary trading, and much, much more. So in the end, I'm doing this for a reason. And keep this in mind. I'm not here to judge your trading success or you as a trader. I'm here to help those that truly want to become successful. If all you want is a pat on the back, you're not going to get it from me. You're going to get, yeah, you followed your plan. Or, sorry you didn't, and this is why I feel. If I don't have your trade plan, I can't tell you what you did or didn't do. Okay? So please understand all of this. It is real. If you don't believe me, go to a bunch of other services. Go move around. And one day you'll come back to this, and it'll be in the public area of trend following trades. I think you're going to find every single item that I'm listing here to be the absolute truth. Consistent trading success is highly unlikely unless all of the above are followed regardless of system or method that is traded. I don't care if you're an outside-in trader. I don't care if you're a scalper. I don't care if you're a position trader, a swing trader. You don't follow the steps above, you're going to lose. And if you think I'm wrong, I'd love to get an email for people that I've told this to that says, you're wrong, I'm right, and I was successful, and I didn't do anything that you said. Because this isn't just me talking. This is my years of experience as a losing trader and transitioning to breaking even and transitioning to a very successful, profitable trader. I still go back to my plan. I still follow all of these rules. Okay? Trade room's a little different. It was a big wake-up call for me, so that's a whole other story. But having said all of this, okay, I want to just read you some comments that you get emails all the time. I want to read you some comments from some people from worse to better, okay? This is one of the worst comments. TFT is a complete scam. I want my money back. All losing trades. Why aren't your arrows plotted all winners? Wow. You know what I mean? There's somebody that really, as far as I'm concerned, is completely misled and understood. And this particular user visited the website 3 or 4 times in 2.5 weeks, the members area. What can you learn from that? No emails, no questions, no nothing, okay? And another one, John, why would you plot hours that are losers? Again, I mean, I don't know how to answer that one. The system's plotting them. The arrows meet a condition that's met. It doesn't mean it's going to be a winning trade. It doesn't mean it's going to be a losing trade, but it plots an arrow, okay? And then we start to, get a little bit better here. Traders of self-admission. John, I'm looking for a green light, red light system, and obviously this isn't it. Yeah, you're right. This isn't a green light, red light system. And those green light, red light systems that tell you to get in here and they tell you to take profit here and put your stop there, a lot of those methods and systems, if they truly work, they would be fully automated. Okay? So we give a guide. We give a good set of tools that I've back-tested over hundreds of hours of markets, and they do present profitability, but you need to create a plan with filters. There's just no doubt about it. And here's a little better one. John, I'm having a hard time with this method, but I'm not giving up. Okay? And this is a person that's obviously not trading with a plan, but is just really sticking, to the hard work that they want to put into it. Please go back to a plan. And I get a little better here. John, wow, back testing is going well. I have a couple more weeks of back testing until I start simulate trading to deal with the actual execution and live market movement. That, to me, is a trader that is on his way to success. He's understood that he needs a plan. He's understood that back testing is an important part of it. He's seen success in his back testing. He's made adjustments. He's back tested it more. He's got some more back testing to do. And then he's actually going to try to go to a simulator. Think about that. He's going to turn on a simulator. This man hasn't even put up a dome. He's just looking at charts. Okay? More power to him. And then it goes on. John, I finally realized profitability. Thank you. And I'll keep you informed. Okay? And then you get these emails, and please don't be afraid to send me these emails. I hope you don't mind me not attending your webinars. I'm now completely independent and profitable. I don't want to change anything or be influenced by any other additions that may just confuse me. A lot of people want things added to the service. They want to trade outside the tools. They want to do all that, and we're going to provide that. This is a trader that has decided that he does not want to be part of that. He's happy with what he's doing, and he's sticking to it. Okay? And the very best is I just don't hear from subscribers. They buy lifetime licenses. A lot of them did. Subscribers that were here, or other people just keep subscribing for tax write-offs or whatever, and I don't hear from them anymore. I shoot them an email, how's it going, what's happening, and I get a reply sometimes saying, fine, just going to keep doing what I'm doing. So having said that, does anybody have any? There's your support right there. Can't tell you enough. Take advantage of it.